Welcome, ladies and gentlemen, to Commodity TV and a new episode of our online interview series back from PDAC just yesterday from Toronto. And now we are moving forward with Fortuna Mining, and Jorge Ganoza is here with us, the CEO of the company. Welcome, and good morning to, I don't know, Canada, USA, wherever you are.
Jochen, a good day. I'm in the US today, and thank you again for the opportunity to speak to your audience.
Absolutely. Thanks for taking the time. I know you're always very busy with such a large company. Also, I'm a shareholder of the company. I want to disclose that upfront. You guys just reported, I think it was 2 days ago, your quarterly, fourth quarter and the full year 2024 numbers. So would be lovely to comment a bit on that because those look really strong and solid.
Yes, our financial results for year end were well received by the market.
Mm-hmm.
We showed Jochen a strong free cash flow generation and expanding margins. Let me tell you, quarter over quarter, Q4 over Q3 2024, we captured 7% higher gold price quarter over quarter, which led to 10% higher sales. With that, we were able to expand our margins significantly, and we recorded a record free cash flow from operations of $96 million for the quarter. We recorded a record net cash from operations as well of $150 million, and our cash flow margin quarter over quarter grew from 33% to 50% over sales. Cash flow over sales grew from 33% to 50%. So all of that was well received by the market. If we look at the year revenue, for the first time, another record, Fortuna generated sales of over $1 billion, $1.1 billion in precious metal sales in the year, which is another record for us. That's like a milestone, $1 billion sales for any company that we cross.
Yeah, and also with the rising profitability, I mean, this shows that you have not only, let's say, higher revenue, but also you were growing the profitability, which speaks for very, very good cost discipline.
And that is key. That you just touched on is key, because a big demand from our investors in general for the industry is that, okay, prices are rising, but are you guys keeping the cost discipline? And the cost creep is eating away on the margin, right? Mm-hmm. And here in Fortuna, we have shown that, quarter over quarter, we kept our cost flat. We sold gold at 7% higher price. We produced 4% more gold, which led to higher sales. And all of that led to a strong expansion in margins and lots of free cash flow. Right?
Mm-hmm.
That's what you wanted.
Yeah, that's exactly what we want as shareholders. And you also returned over $30.6 million to shareholders in Q4 because you repurchased 6.4 million shares, which is great. Also in January, you moved on with that. But also, I often get then the question, okay, share repurchase is wonderful, but how about maybe in the future a sustainable dividend?
Yes. And to tackle your question, let me take a step back, because I think to engage in that discussion, you need to understand our plan, right? Coming out of our expansion into West Africa and the construction of the Séguéla mine, which is our flagship asset, and largest free cash flow contributor in the group, we put that money into production in mid-2023. We set for ourselves 4 priorities. First one, again, coming out of this capital-intensive phase, we said, before we do anything, we need to put together a fortress balance sheet. Mm-hmm. Pay down debt, give flexibility to our balance sheet, strength and flexibility, so we can, return to shareholders comfortably. We can tackle emerging growth opportunities. We can invest in the business. without compromising it, right? So that first objective has been achieved. Fortuna today has a debt leverage ratio of 0.4. We went from a net debt position of over $120 million in 2023 to the current net cash position of almost 60 million. That means that if we service all of our debt, everything we paid out, at the end of that, we still are $60 million positive. And that is growing, right? We have $230 million in cash sitting in our balance sheet today, in our treasury. And we have liquidity available to us from available credit lines that we have not tapped into of over $400 million, right? So that first key objective has been achieved, strength and flexibility in the balance sheet. What do we do with that now? And that's where we're coming to your question. First, we said also, we see a lot of value in the portfolio. And the best thing we can do for shareholders is to unlock the value we see in the portfolio. To that end, in 2024, we invested in the business $49 million. And for 2025, we are investing in the business. And by saying investing in the business, I mean mineral exploration and new project development within the portfolio. $49 million in 2024, and we're investing for 2025, $51 million. And I'm sure we're going to see opportunities to expand that budget throughout the year. What did we do with that? Kingfisher discovery at Séguéla, expansion of Sunbird Deep at Séguéla. We are advancing the Diamba Sud project in Senegal. We are engaged now in the exploration of a very exciting early stage project in northern Ivory Coast called Tongon, and we can talk about that. So we're putting our money where our mouth is. I'm saying we have an exciting property package. We're putting the money to unlock that value, right? And then it takes me to the third point of the set of priorities, which is return to shareholders. After a lot of engagement with our shareholders on the subject of best means to return value to them, we believe that the best option we have is, at these prices at the very least, is return value through the share repurchase program. In fourth quarter alone, we repurchased $30 million of stock. And we followed through into January when we repurchased $1.8 million for 100,000 shares. And then we went into the blackout for the reporting period, right? Where we came out of the blackout yesterday. And you should expect to see us very active in the market repurchasing. But rather than the dividend today, with the gap that we see in valuation with respect to where the gold price is and where the mining equities in general and Fortuna in particular is today, we believe that the best value is repurchasing our shares aggressive. No, we know it's thematic that there is an important gap in valuation for the entire mining sector, not just for
Totally.
the GDX. It's lagging with respect to where the equity sit. If you look at our free cash flow yield today, Jochen, it's 16-20%, our free cash flow yield, right?
Yeah. That's fantastic, I would say. Yeah, absolutely. Regarding the share price, there was a drop lately here. Happened there anything, or was there something to worry about, or was the market blink?
No. On February 7th, we're covered by the largest Canadian banks, no? Scotiabank, National Bank, CIBC, Bank of Montreal, and a few of the other smaller houses. But on February 17th, the CIBC analyst came out with a note really surprising to us, saying you know what? Fortuna's silver production has come down and
Uh-huh.
and should not be valued as a silver producer anymore. To me, that was surprising, particularly coming from an analyst that has been covering Fortuna for years, because we provide guidance. We changed the name of the company a year ago. Jochen, Fortuna was Fortuna Silver Mines, and we changed the company for Fortuna Mining.
Yeah.
Why? To better reflect what Fortuna is today. And it took this poor soul a year to realize that, in spite that we provide guidance where you can clearly see that
I knew it also.
gold has become the predominant. You see, today 80% of our sales is gold,
Yeah, of course.
10% is silver,
Yeah.
and the balance is a bit of lead and zinc as a byproduct that we generate at one of our mines. But this is something that anybody can see just by reading our guidance news release, which is, I would expect, the very basic thing that an investor and an analyst should do: read the guidance release
Minimum, yeah.
that we produce. And we change the name, so there is no confusion, and people don't believe that we're trying to be perceived as a silver producer when we're not. We like silver. I am agnostic, really, silver, gold, gold, silver. A year and a half ago, we had 12 drill rigs turning across our portfolio, and out of the 12, 8 were drilling silver targets. The fact is that our growth has been in gold, therefore our silver production has come down, and today is about 10% contribution to revenue.
Yeah, which is still nice to have.
And I will tell you something, Jochen, and I think of price movements as a wavelength. It's not a perfect wavelength, but I think of it as the full length. In physics, the full wavelength, right?
Mm-hmm.
When prices can come up and then come down and then go up and then come. No, of course, it doesn't work perfectly, but that's how I think of it. Through the full length of that wavelength, through the full length of that wave, from peak to valley to peak, gold outperforms 80% of the time silver. And it's only 20% of the time, let's call the full cycle, can be a decade or can be 2 decades, or however you want to see it. Through the full length of the cycle, gold outperforms silver 80% of the time. And the other 20% of the time, silver goes parabolic and beats on performance every other asset class.
Mm-hmm.
Right?
Yeah.
But I tell you that if you were a silver producer today, you wish you had more gold in your revenue. Today, what's the silver gold ratio today? Instead of closing, it has expanded. It is like 90 to 1,
Mm-hmm.
right? We all think it should be what? It has been 80 to 1 for now, and now instead of closing, it has expanded. It's 90 to 1. And we all think it should be more like 60 to 1, and I'm sure there is a point in time where it'll get to 20 to 1. But I don't run the business on 20% of the length of the wave. I am here mining all the time. So I see at the full length of the wave. So as a trade, I think silver at times can be an excellent trade. Excellent. But I don't trade in Fortuna. I'm mining every day. No, for me, it's not a trade. For investors, can be a trade. No, can be time, and you can make a lot of money. But as a mining company that is producing every day, and we're responsible for thousands of people in the workforce and communities and all sorts of government stakeholders and whatnot, uh, gold provides tremendous stability in their revenues through the years, and then some silver gives some sizzle. That's how I see it.
That's right. Absolutely. As you said, you are mining every day. Of course, you are a mining company. So how was 2024 the success with your exploration to replace all the ounces you have mined?
Yes, we have communicated already through a news release an advance on the growth in resources as an outcome of the discoveries we made, particularly at the Seguela mine. So we have this new exciting discovery named Kingfisher.
Mhm.
We reported an initial resource of about 300,000 ounces of gold at that one deposit. To help your audience, the Seguela mine is a central mill that feeds from multiple surrounding
Like a
uh,
happens.
mineral deposits. We have 6 mineral deposits with resources today. We have Antena, where we're mining, Hula, where we started mining, and Cien, where we have started mining. And then we have Agouti, uh, Boulder, Sunbird, and Kingfisher now, the seventh one coming in line. So Kingfisher is the newest, and it's very exciting because it was a blind discovery. What do I mean by that? In West Africa, a lot of the deposits you discover had a artisanal miners on top of it at some point. This one is a mineral deposit, a high grade gold deposit, 2-3 grams gold near surface, that outcrops for over a kilometer. I mean, sorry, it doesn't outcrop. It has a length of over a kilometer, but on surface is mute. What do I mean by that? If you sample for gold, you know, we did systematic sampling over the area, just covering our entire property as that program. We have a large property, and we're covering everything with soil samples for gold. And in one sample, the team picked up a very weak gold anomaly. And the team had the experience and good judgment that comes from that experience, to don't underestimate that small sniff of gold that they picked up. So they came back and put a drill hole. That drill hole, few months later, we have identified continuous mineralization for almost a kilometer with 2-3 grams gold near surface. It is mute on the very surface, but a few meters below, we have an exciting ore body, right? What's turning to be a mineral deposit that's turning into an ore body, right? So that's where we're putting the money, no? Those type of efforts. Those type of efforts.
Yeah. Yeah, that's fantastic. So if you would look overall on your 4 mines, have you replaced what you have mined altogether?
Yeah, if we look at the whole, we currently travel with close to 3 million ounces in reserves.
Mhm.
Uh, but in a company like us, I believe you have to always consider the reserve and the resources, because how this works, Jochen, is you consume from the reserves and
Mhm.
then you start moving resources into the reserve. And so I think the best way to look at it is look at the reserve, but also consider the resources, because you can see reserves come down at some point, and if you don't have resources to back them up, that's a problem. But if you have a reserve that comes down and moves up and down, it's feeding from the resource, a nice resource base that you have, and feeds into that, because the migration of a resource to a reserve sometimes is a function of time and when the cutoffs for public reporting come, right? So we still are comfortably, I believe, at around 3 million ounces of gold in the reserve inventory, plus good, healthy resources that continue feeding into the depletion, not to fill the gap created by depletion, mining depletion. So I think we're in a comfortable spot today. Yeah.
Okay, perfect. So you spoke earlier about Tongon. What is that new?
Tongon is a very exciting early stage, I might add, project in the northern portion of Cote d'Ivoire. It sits, the old Randgold, today Barrick. One of their first mines, if not the first one, was the Tongon mine in the Ivory Coast, Cote d'Ivoire. And we are some 20 kilometers north from there. And we have a large land package with the right rocks, the right structures, strong gold in soil anomalies that has never been tested. drill test. So we have an option agreement for a joint venture, and we have initiated a 10,000 meter drill program. So we're, I would say, 20% advanced with that today, and we're starting to see some early results, which I can advance are encouraging, and we'll be we're anxious to publish our first news release to talk about that, which should be coming in weeks. No, we need to let the program run a bit more, so we have some more information to provide to the market, so you guys can form your opinion about the work. But it's early days, and we're encouraged. We're encouraged. So
Fantastic.
that's an exciting one for us.
Okay, so that sounds a bit like if everything goes the right way, that could be also a mine in the future.
I will be cautious. I'm cautiously optimistic because it's early stage exploration. But
Absolutely.
you go baby steps, huh? Baby steps. We
Yeah.
have
No, no. Do the thing right.
radiology with good geochemistry. Drill
Mhm.
it.
Yeah.
Drill it. Are you finding gold or not? Yes, we're finding gold. I can say
Yeah.
that we're finding gold.
I
Now,
would say that's first the most important step.
we're finding gold. We're finding a third
Mhm.
dimension to that surface geochemical expression. So the next one is: are we gonna be able to grow it enough? Is it gonna be rich enough?
Mhm.
Uh, that's gonna take some more drilling.
That's for sure. So to your more, let's call it a little bit more advanced project here in the Senegal, Diamba Sud, how is it going there? And very more important, what are your plans there for 2025?
Yes, we have a $19 million budget allocated to the AMBA in 2025. It's a big portion of our growth budget, and the plan is continue drilling it until we see it grow to a size that meets our investment thresholds for mine development. Right.
Mhm.
So
Yep.
we're working on that, but parallel to that, we continue carrying with engineering and permitting, environmental biodiversity studies and whatnot. So we're taking a bit of risk running the exploration parallel with permitting and engineering. You usually do that sequentially, but here, I think the project to us looks like a very good, profitable project that still needs a bit more size.
Mhm.
So, and we believe we have a path to take it to a bigger size. So we are comfortable continued advancing in this first half of 2025, the three tasks in parallel: exploration, permitting, and engineering. Yeah.
Absolutely. That's right. So, regarding 2025, do you see somewhere challenges in your portfolio or maybe problems which could arise?
I talk about opportunities in the portfolio. Uh,
Mhm.
or challenges that we're turning into opportunities. A challenge in the portfolio in 2024 was the San Jose mine. And in fact, in 2023 and 2024, a challenge in the portfolio was our San Jose mine. Let me remind your audience, uh, and particularly for those who like silver very much, that the San Jose mine, which is a project that we brought from early stages of exploration all the way to production and closure. That mine started production in 2010. That's when we brought it into production, and that mine ranked among the top 12 primary silver producers in the world for several years. It was a great silver asset, but it came to the end of its days. So right now, it was in 2024, 2023, it has been a mine with the highest costs. It became a high cost mine with a short life of reserves. Still has resources, but the reserves, short, and so we decided that it became a non-core asset and that we were off divesting of the asset. So, you know, our outlook for 2025, when we look at company-wide cost, is for stable to lower cost. One of the reasons is because San Jose is not in our 2025 outlook anymore. So we're in a sale process to sell the San Jose mine. We have placed it on care and maintenance, and we have parties engaged on the sale process. So again, the mine still has resources, but for us, it would continue to be a high cost mine that does not meet our criteria, right? I rather have capital and management time dedicated to more high value opportunities rather than a high cost mine for us at this stage.
Absolutely. Could you also imagine maybe in the, I don't know, this year, next year to do some M&A? As I mean, you have such a healthy balance sheet, you have a strong share, a strong company. Could you imagine to say, hey, there might be an opportunity, I don't know, in South America with production to buy something?
Yes. But before I go to acquisitions, let me finish up with other opportunities in the portfolio that we're trying to get for the benefit of. So, strategically getting rid of a mine that does not have a long future and is high cost, I believe is in the best interest of our shareholders. And we're doing that. And second, we have captured a lot of value. I cannot stop stressing this at Séguéla. At Séguéla, Joaquin, we have provided for our 2025 guidance and outlook. We not only provided 2025, but we provided 2025 and 2026 outlook. So what you can see in that guidance is that in 2026, the mine goes from 140,000 ounces of gold in annual production to 160 to 180,000 ounces. We have managed to achieve that with very little investment. So it's through optimization of the infrastructure we have been able to unlock that potential of the asset. And that's what I'm talking about. Making sure that we're squeezing the lemon across the portfolio and getting the maximum value for our shareholders. So at Séguéla, which is such an important asset, we're not just sitting down and harvesting the 140,000 ounces that were in the technical report, feasibility study. No, we're continue pushing for growth, and we're achieving it. But more important than the growth we're going to see in production is that growth is coming at industry-leading cost. We guided that we expect to produce those 180,000 ounces of gold at an all-in sustaining cost in the range of $1,300, which today is very competitive. That's industry-leading cost. Yeah.
Okay.
And for M&A, we always have an eye open. Yes. We had our vice president of exploration and his team visiting projects in Brazil and that part of the world 2 weeks ago, right? So we're active in the South American region and the West African region because that's where we play. No, we're very focused on these two regions.
Super. Then also a short question. Your three other mines, we were talking now mostly about Séguéla, Yaramoko, Lindero, Caylloma. You are also feeling comfortable, all is in good shape, all good setup for 2025?
All the mines are performing well. As I said, the problem child in the portfolio became the San Jose mine. And we had to deal there with issues on high cost, safety. No? So that mine has been placed on current maintenance and is under a sale process. And I think it will create value for whoever buys it. We're dealing with private mining groups from South America. And, they at a smaller scale. And I believe that, there is value for some of these local parties to extract steel. Yes, but not for us because of the size of the company, because, other opportunities we have, right?
Yeah, definitely. Fantastic. So I would say all in all, that looks all really good. And you had a successful 2024. now maybe for you, for the next years, it's time to make sure we hit then the $2 billion revenue per year.
I am working on that, but more important, we want $2 billion revenue with the same cost we have today.
Exactly. I would love to have that. Definitely. No, because I think the gold price could easily reach $3,600 within the next 12 months. And so from that perspective, that would help a lot.
You know, I refrain from discussing gold prices because I always tell people, as a mining CEO, people like to ask me about my opinion on gold price and silver price and whatnot. And I always tell them it's ill-advised to ask a mining CEO about the gold price. You know, we're always going to tell you it's going to be higher and higher and higher.
Absolutely.
The fact is that we are, I believe that for our generation, we are in a period of unprecedented unpredictability with respect to geopolitics and economic.
Yeah, absolutely. Now, this is exactly the case. And so we think the gold price will rise definitely further. The only question I would ask you always as a mining CEO is, do you have your costs under control? Because this is the thing what you can influence. The gold price you cannot influence, right?
100%.
Absolutely. Super. Okay. Thank you very much for the last half hour. As always, very interesting. And I think you guys really did a fantastic job. And I'm pretty sure the share price will appreciate that also soon here. And I think it has reacted already on your positive numbers. So I would say you keep it going, and we talk soon about your next results, your next drilling results, especially, and your developments in the company.
Thank you, Jochen.
Well, thank you very much, Jorge. Yeah, ladies and gentlemen, that was Jorge Alberto Ganoza, the CEO of Fortuna Mining. Yeah, you heard it. An extremely fantastic year. Last year for the company, over $1 billion for the first time in revenue. Also, the margins are growing and growing. Fantastic EBITDA. They are buying back shares. Maybe we will see somewhere then a dividend in the future. But I think the company is doing everything right, and they invest heavily also in the business with lots of success, drill success. They have completely recovered all the ounces they produce. They invest in their resources, from which they then do out then their reserves again. So this is all looking fantastic, and I really suggest you have a look onto Fortuna Mining. I'm a shareholder already. You should be too. Thanks for watching us, and bye-bye from Switzerland.